Eva just sent me a text. Dad, my sorority sisters say that you should pay me out of your business on payroll. Why aren't you doing that? Now I'm getting tax advice from my daughter? I got to set the record straight on how to pay kids on payroll. I'm Adam Boatsman, CPA. I'm the managing partner of one of Charlotte, North Carolina's largest public accounting firms. Over the years, I've helped tens of thousands of business owners just like you save money, make money, and stay out of trouble, and most importantly, have fun while they're doing it. The purpose of this video series is to give you proven techniques to take business deductions and get tax deductions for things that you might have not otherwise thought about. So we're going to answer all your questions and most importantly, show you how to do this stuff without having to worry about the IRS showing up at your doorstep. So if you're tired of taking tax advice from some guy sitting in his mommy's basement, you came to the right location. Even more importantly, I'm also a business owner. So every one of the techniques that I'm going to give to you is something that I've done for myself personally. So with that in mind, let's get started. A lot of people ask me why they should put their kids on payroll. Well, real simple explanation, besides, hey, it's a way to get them some money, is you get a tax deduction for it. But how would I get a tax deduction for it, you ask? You know, if I make money, I'm paying taxes. If I turn around and pay my kid, aren't they gonna have to pay taxes? Yes, but here's the but. For starters, you have a higher tax rate than your kid. Chances are, if you're like most business owners, you're in kind of the 25 to 30% tax bracket, meaning that for every dollar that you make, you're gonna have to turn around and pay 25 to 30 cents in taxes. Your kids, on the other hand, are typically gonna be in a 10% tax bracket. So right out of the gate, you're going from your tax bracket down to their tax bracket, instant savings for money that you were probably giving them anyway if you're like me as a parent. But you can actually get them to a zero tax bracket if you stop claiming them as a dependent. That removes them from your tax return, where chances are you aren't getting any benefit for claiming them anyway at your income level, and you let them claim themselves. How it becomes a zero tax rate is they get their own standard deduction. So even if they make $14,000 a year, that's equal to the standard deduction, hence a zero tax rate. So that's the why of what you want to do. Now let's talk about the steps that are required to make this actually work. For starters, you got to pay your kid for some real work that's related to the business. It can't be go wash my car because I have to have a nice looking car, for what I do. I mean, you can try that, but I wouldn't recommend it. Instead, it should be some legitimate work for your legitimate business. So I'll give you a really simple example. Currently filming this video is my son Jacob. Say hi, Jacob. I wanted to not pay him, but I'm paying him for producing this video. That's an example of legitimate work. There's lots of good examples. People say, my kids, very little, what am I gonna pay them for? The common go-to answer is, well, how about a modeling fee? Used to be, hey, I'm sending out Christmas cards, to all my customers. Is that not my modeling fee? But if we think about how a lot of us actually use social media these days, it's really not for personal purposes. It's really more of a, hey, some personal, but really blended with work, because look who's connected to my Facebook account or my Instagram page. A lot of times it's work connections and I'm doing it for work. The company that we use for search engine optimization here at BGW is a company called SEO National, Damon Burton. Shameless plug for you. I promise I'm not getting any incentive for saying that. He's done a great job for us. But he uses his kids in his social media, as a way of just forming a relationship with his audience. Given that, free tax tip, Damon, why aren't you paying him for that? So that's the way that you can pay the little kids. And as you saw from Jacob, it's a way I can pay an adult, or at least he likes to think that he's an adult these days. The key is you need to have a legitimate business purpose and a legitimate rate. So if you're still struggling with legitimate business purpose, when in doubt, consult trusty ChatGPT. I typed into ChatGPT, what are ways that I can pay my kids as a business owner and what for? And guess what? I got these results. Lots of great ideas. So with that in mind, step number 2 is you have to determine what's the correct rate. Well, again, Jacob, say hi again. He was nice enough to actually tell me the rate that I was gonna pay based on his research of what a starting out filmmaker should get paid. You have that as an option. You have minimum wage as an option. Anyway, there's lots of great information on what's a reasonable rate of pay to get to pay your child. And you can pretty quickly get up to that $10,000, $14,000 number. Just do your homework. So that's the second thing that you need to do, is determine what's the correct rate of pay. As always, document. So you've got the evidence of what you decided on. So step number 3, I get asked this a lot, how do I actually pay him? This is where things get a little bit more complicated, because it's not as simple as, hey, just pay him a W-2 or just pay him a 1099. The problem that you get into is that, while paying them, you can go from a 0% rate for federal income tax purposes and state income tax purposes. You still have Social Security that you have to deal with. If you're not worried about that, you want them going ahead and paying into Social Security, that's completely fine. However, that negates some of the tax benefit, because you're gonna have Social Security taxes, you can't get out of those. But the way that you avoid that altogether, there's some little loopholes in the tax code that I'm not gonna get into, depending on your entity structure. But the easiest way to do it is, if you own your company, doesn't matter how many partners that you have, if you own your company, set up a separate company. So step number 3 is, you set up a separate company that's separate from your existing company. And then you pay it a management fee. So you're taking money out of your company, that's a tax deduction, putting it into your management company, LLC, and then turning in that LLC and paying your child. If you do that, you end up avoiding the Social Security taxes altogether. So you are at a true 0% tax rate. So a lot of people also then ask, kind of step number 4, what do we do with the money? Outside of that, well, you got a lot of different options there. It's the kids' money, technically, they earned it, fair and square. So you should set up a separate bank account for them. You can be a signer on that, but it's technically their money. Another great option that's available out there is, if you're also saving for college, while the money, shouldn't be put into a Plan 529, what you can do is you can put it into an IRA. Specifically, the best route would be a Roth IRA. The nice thing about the Roth IRA is it behaves very similar to Plan 529, where the earnings are considered tax-free, and at the same time, your kid can use it for higher education. Your kid can use it for a first-time home purchase. So it's a great way to get money in there that you were otherwise going to put there anyway if you were saving for college or whatever, without having to worry about losing out, on some sort of tax-free gain. Lastly, we'll kind of end, what do you do? I'm surprised that I get asked this so often. If I think about, my 3 kids, Jacob just graduated, but the other 2 are still in college, this is real simple. Instead of me paying the rent directly, I pay them, then they pay their rent. That's exactly how this works. For you to get your tax deduction, your kids to get money tax-free. More often than not, it was money that you're gonna be paying them anyway. You're getting some benefit at work for something that you otherwise were gonna have to pay somebody else to do. And everybody wins, except for Uncle Sam. I guess he did not win so well. Last thing that I wanna touch on is an alternative route that you can take that involves real estate. Another way to accomplish the strategy, let's say that, hey, I work for Bank of America, I earn a W-2, is there another way that I can do this if I'm a typical wage earner? Well, a lot of people as an investment strategy also have rental houses. So an easy way to accomplish the same tactic, but I have a rental house, is I allow my kid to become an owner with me in the rental house. So they earn rental income, earned income, not subject to Social Security taxes, still has all the same stuff around it in terms of wiping out the income if I don't claim as an exemption. Well, the first thing you're gonna ask is, well, wait a minute, they don't have any money, how are they gonna buy the house? You got a couple different options there. One is you could just loan them the money and then cancel it over time without creating income for them. You could gift it to them, that's another option. Or, that's a scenario where they could mow the yard, you could pay them, and then not really pay them, that's their way of buying the house. But that's another way to accomplish the same strategy using real estate. Hope this helped you guys. Hope this made this a lot more clear for you guys in terms of how to pay your kids, and good luck out there. If you like this video, make sure you hit the like button and that you hit subscribe. If you've got further questions, go ahead and post them in the comments below and we'll do our best to get back to them. If you're looking for more information, make sure you check out our website, subscribe to our blog, subscribe to our newsletter, which are also included in the links below. We hope this was really helpful to you, and have a good time.